Welcome to Paradigm Accounting, where we provide a basic understanding and teaching on all things accounting. Call me Dej, I am your host. So today we are looking at the double entry system, but only as it applies to balance sheet accounts. So what's a double entry? And what's a balance sheet? Let's deal with double entry first. It's a pretty simple and basic concept, but it literally shapes all financial statements and ledger accounts. Alright, we already starting out with some business terms, so let's dive right in. The basis. The double entry system describes what happens right in its name. Double. Or twice. Each transaction that takes place in a business is recorded twice. Now I'm going to assume that you guys don't know what a transaction is. And it's so simple. Anything that happens that involves money in a business is a transaction. So, for instance, a simple soap-making business owner buys some molds to form the soap. That's a transaction. Now back to the double part. So remember that I said that transactions are recorded twice. There are two entries. Debit and credit. It's like the yin and yang. Plus and minus. Opposites in the mathematical sense. Based on whether a transaction involves an asset, liability and/or capital. These are the accounts that make up a balance sheet, which basically tells you about the financial position of a business. These three are what we are going to look at as the deciding factors to what gets debited or credited. These are the accounts that make up a balance sheet, which we will discuss in another video, so of course, there are more, but we will focus on just balance sheet accounts in this video. But what are those three terms though? Assets? Liabilities? Capital? Okay, let's slow down. Assets are all of the resources that a business owns. Assets are used by the business to generate revenue for the business. Like for hairstylists, an asset can be a braiding rack or braiding gel or even a comb. For you girls that know, some stylists provide the braiding hair too. That's an asset to them. Or boutiques that sell clothing. Almost every object in the store that the boutique owns can be treated as an asset. Clothes, clothing racks, cash register, even the hangers are assets. If they are renting the store, it's not an asset, however, as it's not owned by them. Anyways. Moving on. What about liabilities? Those are the debts or what a business owes. It can include loans, supplier debts, or accounts payable, or that money you owe to your friend you borrowed money from. Jokes. Yeah, I know I'm not funny. Moving on again. Capital. Remember earlier I gave an example of some assets for a boutique? So the price of all of those assets minus liabilities gives you capital. The available funds after subtracting the liabilities from the assets. Okay, great. Now that we have that down, let's examine the yin and the yang, or debit and credit, as it applies to assets, liabilities, and/or capital accounts. The opposite of a debit will always be a credit, and the opposite of a credit will always be a debit. Every debit must have a credit. For transactions involving assets, the decrease of an asset is a credit and an increase of an asset is a debit. Pro tip: this is where the yin and yang part comes in. If you add money to your bank account and it gives you a debit, then taking money would give you the opposite, a credit. For transactions involving liabilities, the decrease in a liability would result in a debit and the increase in a liability would result in, you guessed it, a credit. Finally, for transactions involving a decrease in capital, that equates to a debit. And as you increase capital, we get a, come on, say it, credit. I know it's boring, guys, but keep up with me now, man. Okay, guys. So we are now equipped with all of the knowledge needed to record transactions using double entry. Here are the steps. Step 1. Decipher if the transaction involves assets, liabilities, and/or capital. Some transactions may include all. Step 2. After identifying which of the three mentioned earlier are involved, decide whether there is an increase or decrease in them. Step 3. Record accounts that are debited and which are credited. Here's a well-known format for recording double-entry transactions. Now let's look at some transactions as examples. A great example would be a hairstylist purchasing gel for braiding clients' hair with cash in a beauty store. We are journalizing for the hairstylist. This transaction involves two assets, the hair gel or stock and cash. Step 1 is complete. Step 2 is identifying whether the assets have decreased or increased. After buying the gel, the hairstylist now has that asset to add to her stock. Therefore, stock increases. But buying the gel also means she paid the money that she had. The cash therefore decreased. Now let's go back and see how assets are treated in relation to debit and credit. The increase in an asset is debited, so stock is debited. And the decrease in an asset is credited, so cash is credited. Congratulations! You just completed the double entry system on this transaction. Let's look at some more transactions. A bakery purchases some flour from the local grocery store on credit. This means that the flour was given to the bakery with the assumption that they will be paid for at a later date. So journaling for the bakery, let's go back through the steps. Step 1. Identify the asset, liabilities, and capital accounts. The flour purchased represents the asset, stock. And the grocery store is now an accounts payable, a liability. Step 2. The flour is now a part of the bakery's inventory or stock and is increased, and the grocery store debt has now increased also. Step 3. Inventory or stock increasing equals a debit and the accounts payable, grocery store, increasing equals to a credit. Let's look at one more example. Susan wants to start a small business making soap bars. She starts off the business with her piggy bank savings. Let's use double entry to record Susan's transactions. Step 1. The cash from the piggy bank is an asset and it's also capital. Step 2. The cash was increased and the capital was increased. Step 3. Cash is debited and capital is credited. Now let's take some observations from the three examples. Did you notice that every debit is always followed by a credit? Good job. That's a general rule of thumb for double entry system. The ing must have a yang. Thanks for watching our educational video on double entry system as it applies to the balance sheet accounts. More videos will be available shortly for you. Like and subscribe for more tips and tricks on accounting. Have a blessed one.